one of the benefits of perhaps being one of the last, major L2s to launch a token is you get the benefit of seeing what everyone else has done and kind of seeing what's working and what's not. And also, again, we really see ourselves, at Linea and ConsenSys as almost stewards of Ethereum. So we're always thinking, like, what can we do that's going to help Ethereum be successful, that's going to make ETH the most important asset in the world? Ethereum actually gave 85% to the ecosystem as well. So we really just mirrored or echoed the sort of distribution of ETH with Linea by giving 85% to the ecosystem. And that is pretty unprecedented. But the thing is that that's actually what it takes to create a protocol that lasts longer than sort of 2-3 years. And the other sort of key thing, again, is that, like, okay, L2s have actually taken some of the value from Ethereum. And what we thought is just, how can we sort of nudge that back in the right direction? And I think one really simple way was just to say, right, 20% of all of the gas fees on Linea, we're going to burn them directly. Obviously, ETH is the gas token for Linea, so it burns ETH directly. So as Linea grows, we actually reduce the supply of ETH itself, so sort of giving back to the L1. But again, all L2s rely on the L1 for security, so it's actually a very sort of symbiotic relationship to do this. And I guess the interesting thing about this is that we're really appealing to large ETH holders or, Ethereum users, the ETH community, because it really is the best place for ETH capital and for Ethereum's future. But everything we've done has basically been designed around what would the ideal L2 look like for Ethereum and for ETH.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic. Today's show features the Ethereum L2 Linea. I'm excited to share our conversation with the head of Linea, Declan Fox, and the lead at Etherex, Trantor. So we talked today all about what would you do if you were going to design an Ethereum L2 from the ground up. With all the lessons that we've learned over the years, watching other L2s launch, there is much to be desired. I think there's been rightful criticisms that some of the L2s could find a way to better align with Ethereum, the network, and ETH, the asset. And so that's why we're here today. We're here to understand what are they doing at Linea that's different and how are they going to break through the noise.
Yeah, and we also really dive into the vertical integration that's kind of forming between SharpLink, the massive ETH treasury company, and Linea, and how many kind of tailwinds are forming with that relationship for what could happen in Linea DeFi because of all that TVL that can come on chain.
I mean, there's a lot of different ways that Linea could go about doing this, but like for example, one of the improvements that we took note of is they're taking all of the ETH that would sit in the Linea bridge, and instead of having that sit idle, it's going to be used to stake, and then that yield, which is hopefully substantial, that many millions or tens of millions in yield, will then be able to be reinvested into the ecosystem. So a lesson, or there's many lessons that have been learned over the years from their predecessors, and I think they've come to the table with some new thoughtful ideas. And if you haven't, thought about Linea in a few years, I'm right there with you. I hadn't been even paying attention to them until they made this recent announcement about their new approach to the upcoming token launch for Linea, and just how are they going to align the community of DeFi users, ETH holders, and Linea app builders all around this ecosystem.
Yeah, and something that's been sort of bothering me is almost like this lack of urgency of, meeting head on some of the criticism of, look, these ETH L2s are just multi-sig bridges. Hey, they're centralized sequencers. What's being done? What's the roadmap to get to where you want to be, where these criticisms kind of fall to the wayside? So we talked through kind of their plans for kind of moving towards a completely native L2.
So before we get started, just a quick reminder, you can subscribe at the-edge.xyz. That's the best place to stay up to date on all of our new posts through the Edge newsletter, but also get real-time notifications for the Edge podcast. You can also subscribe directly to the Edge podcast through Apple or Spotify or YouTube. If you go to our link tree, it's just edge_pod. But then otherwise, one final shout out to our sponsors. Thank you to the sponsors that make this show possible. All of the content that we make here through the newsletter and through the Edge podcast is always free. All you have to do on the newsletter is just submit an email. So everything is ungated. And if you go to our show notes, you'll find all of the awesome sponsors we have, folks like REDSTONE, Maple Finance, and so forth. So check them out, click on the links and learn more. And we hope you enjoy the show. REDSTONE is building the Oracle backbone to unlock real-world finance on-chain and next-gen DeFi. With modular gas-efficient feeds across over 110 chains, trusted by 170 clients, supporting over 1,300 assets, from value-accruing stablecoins, liquid staking and restaking tokens, to treasuries, private credit, and commodity tokens, REDSTONE delivers accurate real-time data where it matters most. The biggest platforms and protocols in DeFi today choose REDSTONE oracles, such as Athena, Securitize, BlackRock Biddle, Pendle, Spark, and Maple Finance. If you're building the future of finance on-chain, you need REDSTONE's leading modular blockchain oracle layer. To learn more, go to redstone.finance, and thanks to REDSTONE for supporting us here at the Edge podcast and Edge newsletter. Maple Finance is one of my favorite products in DeFi. It is a gateway to sustainable real yield powered by over $1 billion in AUM across USDC and BTC products. And now with SYRUPUSDC by Maple, anyone can earn institutional-grade yield. Learn more at syrup.fi, and thanks to Maple for supporting us here at the Edge podcast and Edge newsletter. FALCON Finance, the team behind the fastest-growing synthetic dollar, with institutional yields that are competitive and sustainable, offering yield optimized across your favorite DeFi protocols. Point season is now live. Learn more at falcon.finance. All right, let's introduce Declan Fox, head of Linea, and Trantor, lead at Etherex. Declan and Trantor, welcome to the Edge podcast. How are you doing?
Doing great. Thanks for having us.
Morning. Good to be here.
So Linea recently made a big splash announcing the Linea tokenomics, and there was all sorts of detail about a native ETH yield. There's an ETH burn mechanic. There's a massive ecosystem allocation, I believe, for like 85% that goes to the community. This was huge to me. As someone who's been a long time Linea DeFi user, I was just excited to see this. I recognize there's a radical approach to the way you're going about this. And so, yeah, we want to have a conversation all about this today and get the builder perspective here from Trantor. So, guys, why don't we start, though, with more on the history of Linea? So, Declan, could you talk us through like the original vision and, how did we get to where we are today?
Yeah, I guess I'll throw back down memory lane. So Linea actually started as an R&D project inside ConsenSys. And it actually started even before I joined ConsenSys in 2019. So after the sort of 2017, 2018 bull run, where we had, CryptoKitties, ICOs on Ethereum, we saw things that they wouldn't scale. And it was clear that we needed scaling solutions. And so everyone went off in the research community to kind of figure out what to do. Don't know if you remember, we had like Plasma, side channels, all of these. And we kind of, I think Barry Whitehat actually in the EF kind of came up with this GitHub repo called Rollup. And that's kind of where the idea for like a rollup came from. But the problem there was like, how do you actually like prove the state transition from the L2 to the L1? And so people were looking at these sort of optimistic methodologies. We started looking into sort of zero knowledge as a way to sort of, prove directly the transition. And then we found out that actually proving the EVM was really hard, right? A ZK EVM was almost like impossible. It was like, this is never going to happen. So people started looking at, why don't we do a different virtual machine, okay? So that's where like the ZK VMs came out. People were like, StarkNet or ZK Sync. We said, no, we're going to really just focus on creating the ZK VM. It might take us forever. We might never achieve it, but that's the kind of role that we're going to take and the thing we're going to focus on. And then we basically just spent the best part of about 4 or 5 years building the ZK VM. So, sort of long-term thinking. And it was only really sort of new innovations inside ConsenSys in R&D and then actually the wider crypto community that allowed us to actually get a performance ZK VM. And it was when I was joined in sort of 2022, so came in to sort of work with the Rollups team, And we had this sort of research project, and that was like, well, why don't we actually launch a zkVM publicly as part of ConsenSys? And the original name for Linea was, quite boringly, ConsenSys zkVM. So we launched that. We had a mainnet. Then we sort of rebranded to Linea back in sort of, I think it was 2023, and then launched the mainnet in sort of summer 2023. And then we're 2 years in, just had our sort of second year mainnet anniversary. And obviously things like since then, especially the last few months of all the announcements around Linea, have just kind of taken us to the next level. So it all sort of come together over time, but really started back in that sort of core R&D idea of like, how can we just scale Ethereum and kind of do our part using ZK and like focusing on the zkVM specifically.
Declan, can you talk to us about the relationship with ConsenSys? I've always understood that ConsenSys is like the main backer, or that Linea is almost like I would call it like a business unit inside of ConsenSys.
Yeah, so you can think of ConsenSys as almost like an incubator. So Linea really sort of started again as like an idea inside the company, and ConsenSys gave us the support to go out and test this experiment in the sort of public market, right? And of course, ConsenSys has done that with loads of products over time. MetaMask, Infura, Truffle, Web3 Signer, Bezu, Teku. There's like a whole different sort of list of products or public goods, open source software. So Linea was just kind of the next iteration of that sort of support, really, from ConsenSys, from Joe. And the great thing about the support from ConsenSys is it meant that we didn't have to focus on raising money or like dealing with VCs. We really just kind of had the flexibility and almost like the autonomy to just go and build the best product we could. It was like, what is going to be the best thing for Ethereum? We want to make Ethereum successful. Just go and do that. And it's a sort of comfort as well as a sort of lead of knowing like, you don't have to worry about all the fundraising, creating all the slide decks. It's more just about focusing on user value. And that's kind of the relationship that we've kept even now, is just, what can we do that's going to support Ethereum? So our sort of North Star is very much centered around the L1 and kind of that long-term journey of ConsenSys, really.
So it looks like there's a ton of stuff, I think, that's cooking in the Linea ecosystem. And we have Trantor here on as well from Etherex. Trantor, why don't you just introduce like what Etherex is and how it's situated within Linea? And then there's a ton of stuff we want to get to with, I think, this like growing and obvious relationship between SharpLink and how that all intertwines with everything. But Trantor, why don't you kind of kick off with a little bit about yourself and Etherex?
Perfect, yeah. So Trantor, I'm lead over at Etherex, and Etherex is really the development and sort of an outflow of Nile Exchange. So Declan spoke a little while ago about Linea's mainnet launch, and the Nile's been there since pretty much straight after mainnet launch as one of the decentralized exchanges. Basically, what happened with Nile and Linea is growing together and things going really nicely. And as Linea's continued to develop along, Etherex itself has become, I guess, far more closely aligned with Linea and far more closely aligned more broadly with with the ecosystem. Every DEX says, of course, how closely aligned they are, but the partnership now that exists between Linea and Etherex is at the point where we can scale together and really build together. But I'll take a step back just a little bit. I think every decentralized exchange should be able to answer some of the DEX trilemma. I'm not sure how familiar you are with that, or with your users are with that, but the simple idea is, of course, you have to keep your token holders aligned with your traders, and of course those who are providing liquidity, right? So your LP, your traders, and your token holders. What we know, to be honest with you, is that after years of iteration, and you can start with what happened with Uniswap, it's continued to iterate and continue to build. And where Etherex is now is we sit as the MetaDEX, but also with the enhancements now of the X33 tokenomics. There's a danger here, of course, that I'll nerd out massively and just start quoting to you half of our doc. So I don't want to do that necessarily, but we can talk about that, and you can tell me to be quiet when the time comes. But the key for us is making sure that as we seek to build, we've got such an incentive model that it's too bullish not to come along to Etherex and to get involved. And it's too exciting for Linea and for those who want to get involved in Linea, because they can see how Linea is going to invest in themselves using Etherex as the tool to do that. So a few different concepts there. I guess that the key thing is, if you're familiar with how VNFTs and the 3-3 model has worked previously, this is the next step to that takes away a lot of the friction. And we are standing on the shoulders of giants here to be able to really bring what we think is the most aligned and the best way forward that can scale and can last for the long term. So again, we can go through, and I'm happy to be challenged on any of those, because plenty of your users will be sick of terms like new paradigm in decentralized exchanges or all these buzzwords. Rather than me saying, but we really are, we can have a chance to go through that in the next little while, of course, and talk about how that aligns. So hopefully that answers some of the question.
No, I think this is important to understand, because I think the most successful L2s have their own native builders. If you see an L2 thriving with some of the DeFi giants that will port over like an Aave, clearly that brings a lot of liquidity, a lot of users, but there is something to having your own homegrown heroes. So this is, again, really important, I think, for us to understand, which also cuts to a challenge for other L2s. So there's been a lot of talk about ETH L2 fragmentation over the years. And I think the core issue there is, how do you attract attention? How do you attract liquidity and users? And then how do you maintain them without them leaving the minute the incentives run out? Just a few examples I was looking up today, and not throwing shade on any of them, but like Starkware, for example, reputable team raised something like $280 million at a valuation of $8 billion. They had a token launch that led to a $22 billion FDV, and now it trades around 1.1 billion FDV today. Scroll's another one that comes to mind. These are great teams too, good builders. We've watched them, over the years, but for whatever reason, they haven't been able to maintain that liquidity. So, what's the lesson in all of that for you, Declan? Also you as well, Trantor, but where's the lesson in how you create value and maintain that value and continue to be a prominent L2?
Yeah, it's a great question. I think when you look at the success of blockchains more broadly, you have to have great tech, of course. And there's some of those teams you mentioned have amazing cryptographers, really respected in the ZK space that we're very close with. But it's not enough, right? You need distribution, you need network effects, right? It's that's how you differentiate in a world where anyone can very much easily acquire your users, because sort of taking back to business school, it's almost like the switching costs, right? In terms of Web3, it's very easy to acquire users, very easy to lose them. So it's all about building those network effects. And I think if you look at some of probably the first iterations of even rollups, just taking L2s in particular, like the optimistic rollups, the first mover advantage there is huge, right? Being able to get the first sort of apps, the liquidity, build up those network effects over time. And then sort of, again, focusing, I think, really on what matters most for people using the blockchain today, which primarily is still, sort of trading, sort of swapping, whether that's, NFTs or DeFi, or whether it's meme coins, it doesn't matter. A lot of it's sort of trading, a lot of payments is taking place as well. So I think sort of the chains that have done the most successful job is having good enough tech, focusing on distribution or something that's very unique to them. And that's, again, why you see all these sort of what I would call exchange rollups, right? Even sort of Coinbase with Base is an exchange rollup. You see this for Ink and Kraken, because they have that distribution already, which is what they're sort of leaning into. But then you also need to have the network effects. And I think, again, it's all about what is your sort of unique value proposition outside of just a good product and a good technical team.
I want to kind of take what you're saying with distribution, because there's something massive happening within the Ethereum space. And, a lot of different crypto tokens are kind of feeling this effect of treasury companies. So Joe Lubin launched SharpLink, ticker SBET, and I've been watching this extremely closely. And I wrote a big article about this. I think what these treasury companies can do that have smart contract programmability like SharpLink is kind of amazing for DeFi. And I think it's going to be a huge injection of new TVL and interest into DeFi. So I kind of want both of you to take this and run with it. What new possibilities does this open up? Assuming that a lot of that SharpLink TVL could find its way to Linea just due to that obvious connection. What does this mean for, I guess, Declan, for you on the Linea side? And then Trantor, I'll kick it over to you too. Just what does this mean for an app builder, at Etherex.
Yeah, I think what has happened here with these sort of treasury company plays is it's created a very easy bridge for TradFi to come into DeFi. That's really what it's doing. It's allowing, any sort of traditional investor who might not have sort of looked into DeFi or even looked into Ethereum now has a very easy avenue for them to get involved financially. And that's great because it creates very sort of, obviously increases the amount of liquidity and capital coming into crypto, which obviously it relies on as a sort of very much financial and capital market. But it also increases, let's say, the stickiness of that liquidity as well. These are usually long-term investors. They're not necessarily like mercenary sort of LPs. And I think what we're going to see here, especially for the chains like we focused on with Linea, to really sort of accommodate providing the best place for that capital to come into DeFi. And that's obviously providing a great return, because you can now get great returns through DeFi and through ETH than you can going into some more traditional instruments or even some other sort of crypto instruments. But we're doing it in the most secure way, because obviously these types of investors, these companies are very focused on security. So it's all about the risk-adjusted return. And again, that's something that we've been thinking about a long time for Linea, and really feel like is a specialization of Linea mainnet, which is providing your capital the best return. And we have this through our new native yield mechanism, which we announced, really sort of appealing in particular to ETH holders by, as this capital comes to Linea and it goes on sort of, applications like Etherex, people start to trade, that then burns ETH as well, like as the trading volume increases, therefore reducing the supply of your holdings and increasing the value. So it creates this really nice flywheel where I think some investors coming through traditional finance are going to be shocked to the returns they're getting. And all of a sudden, with all the user experience benefits we've worked on over the few years, it's not particularly scary anymore. Like, it's really crossing the chasm. And I think, of course, that all the builders building on those blockchains are going to benefit from that injection of capital and attention.
Yeah, I think it's a strong point that, the ability to bring across that much capital and to actually deposit it on an L2. I mean, like we've talked about previously as well. I mean, Joe's somebody, he's a huge brain. It's the 5D chess sort of thing. Obviously has an amazing haircut, and I don't want to talk to him and his focus on how he wants to bring the capital across. But key is you'll have surplus capital, and there'll be yield arbitrage opportunities there for anybody who wants to come across and cheap access to all sorts of, opportunities for yield. So whether that's deposits on Aave, whether people want to then loop that or put it into Etherex, etc., the ability for people to have surplus capital and to have it flowing around the ecosystem is big. That then drives far more volume on the core pairs that we're all very familiar with, your USDC, ETH sort of pairs. And notably, that's what drives volume to people to go a little bit further out in the risk curve, right? So people who want to get into meme coins, or people who wanted to get into other more speculative plays, all those things become more of a possibility as you move forward. And then for those, of course, who see, I guess, the benefits structurally to the broader Linea ecosystem and how the whole sort of DeFi wheel will play out, which is key to this relationship. The ability to actually then invest in Etherex for those who want to, non-financial advice, etc. You can actually get involved in being the people who sell the shovels to these, to the miners, kind of thing, and actually be involved in it more holistically. So that's, I think there's just so many opportunities when you've got this surplus capital coming in, and Declan, he said it dead right. I mean, it's sticky, it ain't going anywhere, and that is a huge benefit because people can then bank, well, they can at least be more confident that liquidity will remain.
Yeah, there's such a synergy here between an L2 like Linea and then a massive ETH holder that is competing in the public markets to offer yield denominated in ETH. Like, I was just reading today, SharpLink bought another 83,500 ETH, which is I think it's like $260-ish million of ETH. Now they hold 521,000 ETH, which is, I think, equivalent to about $1.9 billion. So like that liquid staked ETH or staked ETH, whatever it is, it's already earning a competitive 2.7 to 3% yield. To be able to put that to use on chain, to your point, Trantor, is huge. Like, anyone who's seeking that levered sort of ETH exposure is actually getting something more. They're getting DeFi yield thanks to these strategies deployed on chain, but they're getting it by just buying and holding, a publicly traded stock. Like, that is wild. Like, this is like something that I really thought was not going to happen for maybe decades. And now, like 5 years after a DeFi summer, we've got this all playing out. I'm wondering, do either of you have thoughts on like where some of the better yields, the types of yields, it doesn't have to be specific protocols, but I have thought a lot about like what types of yields would fit neatly into an SBET type offering or any other like ETH digital asset treasury. Like, is it the Aave lending types of yields? Is it using some correlated pair of like, liquid staked ETH plus ETH and something like Etherex? Anyways, curious if you've thought about this.
Can I take that one, Trantor?
Yeah, sure. So, I mean, of course we thought about it. What an app to put things on Etherex, right? So, fantastic. I'm here. No, but I think the opportunity clearly by having, and the way it'll be staked as it comes across to Linea from Declan there is kind of key, right? Because you'll be able to get best returns on Ethereum anywhere. So, like anywhere across, any L2 you want to go to or anywhere else you want to be, if you want your best yields on ETH, you'll come here. And that is already an outsized story because, the discussion out there at the moment is if SBET is going to become the micro strategy for Ethereum, if that's the big story, and then we're able to say, and what that actually means is real returns and everybody can see it, then that becomes big. You mentioned in particular, what apps are going to benefit. Clearly, decentralized exchanges will, but as will the lending protocols. So Aave will be big. There's some other lending protocols, of course, that are continuing to develop and grow, and how they can then create additional yield opportunities for people, I think, is very big. So I think those are kind of the areas, because the more surplus capital is deployed, the more people can then build, the rest of DeFi Lego on top of it, right? Because they have that knowledge that this capital will remain and be something they can tap into. So I think that's, whether it's lending protocols, whether it's exchanges, or in fact anywhere else you want to sort of deploy your capital, I see there's benefit all around that, rising tide really for the entire ecosystem.
This episode is brought to you by MANTLE, pioneering a revolutionary new category called blockchain for banking by bridging TradFi and Web3 into one unified stack. With on-chain transactions, TradFi rail compatibility, and integrated DeFi features, MANTLE is reshaping how financial services work. Their flagship app UR lets users hold fiat and crypto all in one Swiss-backed account, making real-world finance usable on-chain. To learn more, go to ur.app and follow mantle_official on Twitter. Spark, one of the leading DeFi protocols, has had a year like no other, deploying $2 billion into RWAs with BlackRock's Biddle and other institutional giants, adding over $1 billion in TVL, and distributing over $9 billion across the DeFi ecosystem. Now, Spark are setting their sights on further global expansion and have introduced the Spark token, which is available on leading centralized exchanges. There's never been a better time to discover Spark, the on-chain capital allocator. Learn more at spark.fi.
One thing that I want to ask in all of this, and something that I think about with what's about to happen here, is how do people get comfortable with the infrastructure? I mean, I know, being a participant in the space for many years, there's a certain Lindy and comfortability, I can't say that word, that you start to get, but curious, like what, I guess, we're talking about like institutional grade security. Not that should be any different than retail security, you know what I mean? But I feel like maybe it's put under more scrutiny when you're talking about bringing, say, 1.9 billion of publicly traded capital on chain. So how are you two thinking about that angle of, hey, this needs to be airtight, institutional grade security that everybody can get comfortable with?
Yeah, we've been thinking about this and preparing for it for a long time at Linea and more broadly ConsenSys. Even when we look at maybe the Linea protocol itself, one of the reasons we decided to not pivot from the EVM was you have this decade of R&D, billions of dollars gone into, a system that has been battle tested under very sort of adversarial conditions, right? And so when you're an institution and you're sort of starting to come and look about joining, coming on chain, you look at that and you think, well, that's perfect. That's all the sort of Lindy, the sort of the battle hardened environment that I want to deploy into. And maybe some people will say, well, the EVM has these problems and it's not as efficient as this other language or virtual machine, but again, most of these companies are like running their existing businesses on like, COBOL or like some sort of ancient language there, Fortran. So that's really not what they're looking after, just looking after that predictability and that sort of battle-tested environment on the protocol. I think in terms of getting on chain, because, there's obviously sometimes a bit of a knowledge gap where like, okay, there's this DeFi thing, which is new to me, it's kind of familiar to traditional markets, but, I have a wallet now and I have to sign things and it's, very different. I think the sort of infrastructure around the chain has like grown so much in the last few years, like qualified custodians, sort of different, like better signing signatures, like UX. I think all of those things, I've seen directly like more institutions coming on chain use these tools and find it way more simpler than it was even just like 2 years ago, let's say. So the onboarding has got a lot more simpler. The signing experience that gives people the reassurance that what they're doing is in fact, correct, has improved. I think as well, like a little bit of it is just sort of good old like BD and like brand trust. And I think, again, that's something that we did a lot at ConsenSys, was like just getting in the room with the right people, educating them on crypto and what it is, like helping answer their questions, helping them know that, it's not just some sort of scary, ambiguous blockchain they're dealing with, but actually there's a counterparty there who they can trust, who understands their business, and again, sort of guides them and sort of steers them on chain to these sort of protocols. And especially when you're looking at, Ethereum as an L1 and then actually going to L2, and I kind of really see, I often say Linea is kind of the gateway for institutions coming into Ethereum. Not even just institutions, but actually like users, capital, and institutions. Because not only can they deploy on Linea mainnet, whether that's capital, their applications, but you can also now deploy your own L2, and that's actually been happening as well, where like you could take the Linea stack itself and deploy your own version as well. So there's all the possibilities, and I think the key thing for us is just like, walking through that journey over the last few years to a point where they're now finally comfortable to actually come and anchor into a public blockchain.
One thing that I read about, and maybe it was in the recent Linea tokenomics announcement, but it's referred to as ETH native staking. But when speaking to the context of Linea, can you explain that or just dumb that down? Like I think of, ETH native staking, like normally I think of us being on the L1, just having the assurances and the protections of being on ETH mainnet, but obviously L2s like Linea we think of as an extension, a better user experience. So like what's gone into that feature, that offering?
Yeah, so the good thing is there's no different to staking on the L1. That's exactly what's happening. So I guess for the audience, like, roll up, you usually take your ETH on Ethereum, you bridge it to the layer 2. What's actually happening is you're just depositing your ETH into a smart contract on Ethereum, and then it almost mints the equivalent asset on like a layer 2. And this is why you have what we call a bridge. And really what we've done with Linea, with this new native yield feature, is say, well, you've got all this ETH sitting idle in the smart contract on Ethereum. It's not doing anything. It's not earning any yield. It's just sitting there. It's not helping to secure the network. So actually with this new feature, we've found a very secure way to stake, like take that ETH in the smart contract and stake it straight into Ethereum validators. So this isn't even using liquid like staking tokens. This is going straight into native validators. And then your sort of ETH on the L2, when you put it into DeFi, whether that's the Aves or the Etherexes, you'll be able to receive a portion of that yield that the ETH is earning on the L1. So you basically turned, ETH on a roll up into what is usually an idle asset into now a productive one. And I think the core innovation here is that you now have these sustainable returns for liquidity providers in DeFi. You no longer have to rely on these sort of unsustainable token emissions, which is really what a lot of DeFi has been running on over the last few years. It's now real yield, it's sustainable yield. And that's something that, again, these big institutions see and they like. And I think it's really going to be attractive for them. And it's something that's going to make Linea stand out as well.
I'm curious, will Etherex ever have like a different front end, like a different UI for institutional type investors versus what the rest of us experience as like your typical permissionless on-chain DeFi user?
To be honest, no. So like retail gets the same experience as institutions, and that's kind of core to who we are. So everything is like it's same for everybody. Everything is permissionless. Everything is as decentralized as possible. 100% of fees to stakers. You get the idea. Like there's no one is special. So
this is probably a good spot for us to start to talk more about again the the tweet, the post, the announcement that really prompted my attention to return to Linea. So it was the tokenomics announcement recently. And Declan, I'll let you walk through all of this, but I just recognized some radical intention to ensure that Linea is aligned with the success of Ethereum. I feel like a lot of L2s have done well over the years and absolutely delivered a better DeFi experience for all of us as users. You know, we wanted cheap, fast transactions. That's great. But at the same time, as an extension of Ethereum, you know, I've wanted them to lean into ensuring that ETH accrues value as well. And so anyways, that's been my takeaway from all of this. So anyways, whatever you can do to walk us through what's gone into these Linea tokenomics.
Yeah, I guess like one of the benefits of perhaps being one of the last, you know, major L2s to launch a token is you get the benefit of seeing what everyone else has done and kind of seeing what's working and what's not. And also, again, we really see ourselves, you know, at Linea and ConsenSys as almost stewards of Ethereum. So we're always thinking, like, what can we do that's going to help Ethereum be successful, that's going to make ETH the most important asset in the world? And I kind of saw two sort of key problems, right? And these aren't sort of, you know, they aren't well-known problems, right? One is that I think like most L2s, again, were startups, they kind of get VC funding and they end up looking more like corporations with CEOs, right? And their sort of tokens actually reflect that, where I think when we're doing our research, around 40 to 50% of most tokens are for, you know, the team and sort of VCs as well. So that's sort of half the token supply, which is purely designed to kind of, you know, cash out and reward those sort of early, you know, people to create the chain. But that's a real sort of difference from, you know, we go back to even Ethereum itself, right, which is an open source protocol, right? It doesn't look like a corporation with a CEO. It's an open protocol. Ethereum actually gave 85% to the ecosystem as well. So we really just mirrored or echoed the sort of distribution of ETH with Linea by giving 85% to the ecosystem. And that is pretty unprecedented. But the thing is that that's actually what it takes to create a protocol that lasts longer than sort of 2-3 years. As we've seen with Ethereum, it's lasted a decade. And I really think this tokenomics allows Linea to actually last way more than a decade as well. And the other sort of key thing, again, is that, like, okay, L2s have actually taken some of the value from Ethereum, right? They've helped to scale it, but there has been a sort of shift, an Overton window shift, where I think too much value is going to these sort of corporations, these L2s. And what we thought is just, how can we sort of nudge that back in the right direction? And I think one really simple way was just to say, right, 20% of all of the gas fees on Linea, we're going to burn them directly. Obviously, ETH is the gas token for Linea, so it burns ETH directly. So as Linea grows, we actually reduce the supply of ETH itself. So sort of giving back to the L1. But again, all L2s rely on the L1 for security. So it's actually a very sort of symbiotic relationship to do this. And I think what was interesting actually is that someone asked me after, you know, like, oh, that's not really sort of like a moat. You know, someone else could actually choose to also burn ETH and sort of take away that unique thing about Linea. And I kind of responded like, that's great. Like, one of the reasons we went for 20% is that it's actually a number that, you know, I think others could consider doing as well. If it went too high, maybe it would like ruin their business model. So I thought 20% was actually an amount where if others want to go and burn some ETH as well, then actually that's kind of achieved our mission and what we would like to see done. So in many ways, it's sort of, you know, we actually did that intentionally to kind of see others copy us. So yeah, it was really those two things. One, we actually wanted to have a tokenomics that was for the ecosystem, just like ETH, and really looked like an open source protocol. And the other thing was make sure that we're actually delivering value back to the layer one that Linea, you know, depends upon. And I guess the interesting thing about this is that we're really appealing to large ETH holders or, you know, Ethereum users, the ETH community, because it really is the best place for ETH capital and for Ethereum's future. From the technology to the tokenomics to even the governance as well. And so I can get into the governance in a sec, but everything we've done has basically been designed around what would the ideal L2 look like for Ethereum and for ETH.
Hey, I have a quick question there, Declan. So I like how you framed that up about the 20%. It was kind of an intentional amount that you thought others might follow. Curious, like, I know, you know, everybody's sort of close and sometimes more kumbaya in the community, but like sometimes not. curious if you've spoken to any of the base team or Arbitrum team, or if they've had feedback, or if they've been like, hey, we might do that too, or like, hey, no, we're going to keep it all for ourselves. Like, have you heard anything about that so far?
So not those teams you mentioned yet, although definitely always open to having a conversation, sharing a bit like how we're thinking about it. Definitely other teams looking to launch on the Linea stack itself. So I think we've kind of created this almost like community around not just Linea mainnet, but Linea stack. Like if you want to go and deploy your own L2, where they would also potentially commit to like burning ETH, and even protocols deploying on Linea mainnet as well would also sort of join that mission to burning ETH. So I think it's sort of creating a bit of a momentum, and hopefully again just shifting the window towards people that really think this is the right thing to do. And then I expect more and more to join, and sort of again my DMs are always open if people want to talk about that and how we can help them. Glad to help.
Declan, there was another like feature or benefit mentioned with bridged ETH staking rewards. Can you explain like what is this even referring to? I'm not sure if a lot of users realize all of the ETH that is available in these canonical bridges. Like, how does that actually work? And then what's the opportunity here that Linea is capitalizing on?
Yeah, so a lot of this ETH sits idle in the bridge, and what we've done with this new feature is we're going to stake it. The rewards earned from that staking will go to a fund, and this fund will be sort of overseen by the Linea Consortium, which is this new, Delaware-based, US-based non-stock company. And then they'll sort of, agree on which Linea DeFi protocols to actually distribute those rewards to. So as you bridge to Linea and you take up positions in lending and borrowing markets, in decentralized exchanges, you'll also be receiving not just the DeFi rewards that you get from LPing, but the staking rewards from the ETH that's sitting in the L1 bridge as well. And so when you're looking at, even today, you're talking about, billions of dollars sat in these roll-up bridges. I think, in 5-10 years, you can imagine tens, hundreds, maybe even more, getting an extra 2, 3, 4% of staking yield, and actually distributing that to the DeFi on Linea is going to be enormous amounts of money. And so not only is it really good for DeFi, but actually this is going to staking on the L1, which is good for the security of Ethereum. So it's got a sort of a double-sided win here.
Hey folks, I want to tell you about our sponsor Gearbox, the protocol that reimagines on-chain lending. With Gearbox, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about Gearbox, go to gearbox.fi. Rumple Labs is revolutionizing DeFi. Rumple lets you turn points into profits by tokenizing rewards you can trade from top protocols like Pendle, Athena, Fluid, Symbiotic, and many others. No more waiting for airdrops or TGEs. DeFi's smartest investors are already using Rumple to unlock instant liquidity and maximize their yields. So join Rumple today and start spinning your points into gold. Learn more at rumple.xyz. Say hello to Puffer Unify. Puffer Finance is expanding beyond native liquid restaking with new products such as Unify-based rollup and Unify pre-confirmations AVS. Unify is not just another L2. Unify is a based rollup, one that will solve L2 issues, such as slow withdrawals versus instant withdrawals with Puffer Unify. Puffer Unify is fast, capable of sub-second transactions. Unify also has boosted Puffer points, which means if you bridge assets, you earn boosted Puffer points and rewards from dApps on Unify. Puffer's core products mean a bright future for Ethereum. Learn more at puffer.fi.
Maybe, Trantor, can you kind of speak to how some of these tokenomics decisions will impact, you on the builder side at Etherex? Like, dare I say the overused term flywheel, but it seems like there's a lot of synergies here that maybe you could speak to probably best.
Yeah, for sure. So there's clearly part of our mission is scaling, with Linea more broadly. And that's one of the reasons why, the partnership exists between Etherex and Linea, is the ability to scale. But to talk directly to that, the actual ETH, it's the additional Ethereum rewards are essentially coming through. It means really two things. One is, depending on how it's allocated, of course, It means there's a sustainable version of direct yield to LPs, essentially, if you want it that way. It can also be used, of course, to further investment into the ecosystem itself. In other words, through additional acquisition, basically, of the REX token itself, which is part of the emissions flywheel to keep things moving. So you've kind of got two different options there, both of which can be decided by linear governance, essentially, on how that'll be done. And of course, speaking to how those decisions are made, of course, is a Declan thing. But what we've got here that I think we need to remember is the key part. You've got a sustainable and continuous version of yield that will continue to come into Linea and provide additional rewards. And you've got means for how you can do that, where you inject the capital into the flywheel that's going to either speed up the wheel or to slow it down or to however you want to do it. So there's different opportunities there. And that's really the biggest piece, because if you have that and you have the knowledge of ongoing incentives, you don't need to use unsustainable means of doing so, like we talked about before, by burning, just throwing away linear tokens or throwing away REX tokens for that matter. We don't have to do either of those things. We have a sustainable model because of the way this entire system is structured.
Yeah, so if I can just jump in there, like the other interesting thing about what we've done is that because you have 85% going to the ecosystem, and the vesting of that is over effectively 10 years, right? So it's this real long-term fund which is going to be overseen by Ethereum-aligned institutions as stewards. So they're really going to be able to thoughtfully use these emissions to like grow the ecosystem, actually invest that in like open source protocols, sort of public goods, builders, users, anything, but they're not having to emit it for providing yield for DeFi. So you've got the real yield coming from the staked bridge, which is going to go to incentivizing a very capital efficient chain. And then you've got 85% of the entire token supply effectively going into these long-term thinking of like how to grow the network itself. So it's really very different to what we see in any sort of other like chain tokenomics and like incentive model.
One thing I might have missed over the years, are there any other investors in Linea other than ConsenSys?
There are no investors in Linea. Linea has been completely, bootstrapped, incubated from within ConsenSys. ConsenSys has its own investors, but the actual like Linea protocol itself has been, completely created from ConsenSys. I should mention it's an open source protocol, and what we're starting to see now is teams outside of ConsenSys and the Linea team like contribute to that work. So actually Status, who been around for a long time, they actually won an ICO back in 2017, part of the Institute of Free Technology. They're also launching an L2 using the stack, and they're actually contributing to the code base. ENS, so obviously Ethereum name service, they're also launching Namechain using the Linea stack. They're contributing to the code base now directly. So again, we're sort of, taking the lessons of Ethereum where, it takes like many different teams to create a sustainable network, not just on the protocol, but also the ecosystem, right? I actually consider, all the work that like Trantor and the Etherex team and all the other amazing builders on the chain are doing, really are a core part of the success. So it sort of takes it takes a village, but here it kind of takes a world.
And then the 15% of the token supply that goes to ConsenSys is in a 5-year lockup, or any other detail on the vesting there?
Yeah, so it's just a 5-year lockup, which is, again, very unusual. I think most, let's say, like, quote unquote, like foundations would have a sort of standard, 4-year vest with like a 1-year cliff. With, ConsenSys, this is a sort of 5-year complete lockup. I think what we're trying to do here, again, everything here is long-term thinking. So there's no intention to ever sell. All we wanted to do is actually sort of provide a way to be a long-term participant in the future success of Linea. I think you can say that and then have like an immediate unlock, and people are like, well, trust don't, verify don't trust kind of thing. So that's why we put the 5-year locker. But really there is an intention here never to ever sell these. This is really just for like long-term participation in the future Linea ecosystem. And that's why, ConsenSys has 15%. Very similar to how the Ethereum Foundation had 15% for the ETH Genesis as well.
So cool. And then speaking to that future participation in the network, can you just walk us through how will governance work for Linea?
Yeah, so the governance of Linea is also very different to, I would say, standard for L2s, because usually you have, token holder governance. That was sort of a big thing maybe back in beginning of, let's say, 2024. I think what we've seen now with the different sort of changes in the US with regulations and sort of the ease of which people are now viewing blockchains, especially Ethereum and ETH, it made sense for us to actually go more towards the US. So we actually have now what is going to be a Delaware sort of US-based non-stock. Looks very similar to sort of typical consortium you'll see in more traditional industries. And there's going to be 5 founding stewards. Okay, so the 5 founding stewards are ConsenSys. We have SharpLink as well, because they're obviously a big influence now on the Ethereum space, and obviously therefore by extension Linea. ENS, Ethereum Name Service, Status, and then also Eigen Labs as well is the 5th. And, we expect there to be more in the future and sort of different levels of membership, but it's really these sort of stewards who we know are very aligned or Ethereum-centric who are going to be the ones overseeing this, 85% ecosystem fund. And so that's definitely a way more exciting and sort of accountable way of sort of utilizing this effectively largest Ethereum ecosystem fund we've ever seen since ETH itself. So that's really the thinking behind that.
Declan, one thing I would love to kind of get your take on is I think it's worth just looking at criticisms of L2s that I've seen a lot of people bring up. So some of the ones that come to mind, like the most prominent ones are, I've heard L2s are just multi-sig bridges. L2s are centralized sequencers. So I'm curious what Linea is doing to address or combat some of these things, or do you think these are valid criticisms to begin with? Like, how are you thinking of, I guess, being that good example or being a good steward kind of going forward with the future of L2s in general?
Yeah, I think it's a very valid question. I think we should always be holding a high standard towards our ecosystem, and layer 2s are obviously a key part of that. I think L2Beat does a fantastic job of making that very transparent. One of the things that we are doing with Linea is actually the technology itself, because it is truly EVM equivalent, and that word gets bandied around a lot, right? Everyone's sort of EVM equivalent, EVM compatible. But my sort of litmus test is can you take a Ethereum client and sync it to the L2 chain? And I think Linea is the only one you can do that with today. You can take a Geth or a Bezu node, a client, and sync it to Linea, because it is exactly the same. But why is that interesting? Obviously, that's good for the institutional point I mentioned earlier, because it's the same EVM specification. But more interestingly, there's this new concept called a native rollup. So essentially, you can take the technology and actually almost enshrine it into the L1 protocol itself. So it really becomes almost like a sort of programmable shard within Ethereum. And if you've been sort of following the sort of Ethereum roadmap, they actually have these plans to kind of move towards a native rollup. I think next year it currently is, according to the whole, all core devs process, of course. And so Linea is actually, I think, one of the only rollup technology stacks that is ready to go on that timeline. So native rollups means enshrined into the Ethereum protocol itself. You can get rid of those multi-sigs. You sort of reduce that smart contract risk. Upgrades happen automatically as the L1 upgrade. So really, we're working towards a future where, the difference between the sort of L2 like Linea and Ethereum itself is almost negligible. And that's why, we often say Linea is Ethereum, because that really is, we truly believe that in terms of everything we've done, the technology, the governance, tokenomics, the economics, that is the direction we think is the right way for the sort of the roll-up centric roadmap, essentially.
And just quick follow-up to that, I know you said sometime next year. Do you I know it's probably almost impossible to say hey, when, but what are you seeing as kind of a best guess? Is this a year away, do you think? Is this 2 years away? Where would you put it?
I would say a year away. I might have said 2 years away if you asked me 6 months ago, but I think the speed at which the all core devs process and the new sort of impetus from the EF to really get things moving faster has given me lots of encouragement in terms of the velocity. And we're already seeing that, I think, with the next upgrade, sort of looking ahead at Glamsterdam, some of the sort of speed at which teams are coming together to produce dev nets for new features, the clarity at which the teams are aligning around what to focus on. I think for a long time, Ethereum was kind of missing almost like a product lead, someone to be these are the problems we want to focus on as a community. So therefore, we need to go and prioritize these solutions. I think that was missing until up about 6 to 12 months ago, and it's improved massively. We now have these headliners. You can now go on the website. I can't remember what the website's called, but it's fantastic, where you can sort of select which EIPs you want to see. So I think based off that, I would actually put the sort of future of native rollups about a year from now, let's say. And we're also working at ConsenSys to on a new EIP where the layer 1 Ethereum client, let's say like a Bezu client, which again is like, the team at ConsenSys is working on this client, will actually be able to take a zero knowledge proof from a Linea prover and then verify it on the layer 1. So this is awesome because you can almost now ZK snarkify Ethereum itself using the same technology that Linea has on layer 2, using it directly on layer 1. And that's cool because then you can verify nodes just like with your smartwatch or your smartphone by receiving a proof.
We're getting near the end here, but I wanted to go back to Trantor just to maybe speak to how does this all come together on your side of things with Etherex, and how does all of this grow? I guess with maybe Etherex kind of at the center of things.
Yeah, I think that's we designed, to be honest with you, the partnership in such a way that it's focused on growing the ecosystem together. So if you look at the starting allocations, you'll notice that Linea itself sits at 25% of the actual allocation of the voting power within Etherex itself. And the reason for that is we want to make sure that as incentives are brought into the ecosystem, that Linea has a means of investing in itself. That really fits to the entire model of what we're building here. So, a MetaDex plus with the X33 tokenomics, because instead of, what you've seen in the past where you throw incentives at mercenary capital, in this instance, incentives instead can be used essentially to buy into the future of Linea. And that's what investing in XREX means for Linea particularly, because they're able to buy basically increased voting power, which of course has benefits to the actual value of the emissions themselves, but they're able to buy it and invest into themselves and invest into the future fees and volume, etc., that Linea itself is driving. So I guess hopefully that is a clear understatement, or a clear statement, I should say, where you may have seen things like, for example, on Base with Aerodrome and how they have their relationship. In this instance, Linea has a strong position from the start, and it has invested in itself to make sure that it can grow. When you start to see Linea tokenomics come in, when you see additional ETH yields coming in, and then when you see surplus capital, what you've got now is an engine through Etherex where you've got those three elements of the DEX trilemma working together, but Linea directly has the ability to supercharge that flywheel essentially through the ability to invest in themselves. In other words, by buying REX, locking it into XREX, and then voting those emissions on the core pools. So again, I don't want to go entirely into how the whole DEX works. Of course, come and check us out. But the key is every week, Linea will be able to vote on the pools that are the most important, not on random pools they don't need or something that some particular VC or big whale wanted to vote on, but instead to vote on pools that are actually going to provide productive liquidity moving forward and help to scale. And those emissions have value, and they have value simply because they need to, because Linea to invest in itself must be gathering more of those emissions every week. So I'm hoping that makes sense, from a how things grow sort of perspective. The last part I would say to that is, again, if you want to look at the Aerodrome base example, where I think that can top out sometimes, and I would never throw stones, so please don't quote me in a negative way, is that when you've got a high friction model like the VNFTs, the VE33 system, which is our old system, don't get me wrong, you really miss out, I suppose, on some of that fungibility that I think institutions need. And so that has been a big blocker for DeFi in the past, is that institutions need the ability to dispose of assets or to value them appropriately. In this instance, because we'll have Rex33, which is essentially a fungible version, or you've got instant exit through XREX itself. Basically what I'm getting at there is your voting position, you can dispose of it, you can trade it, you can have a wrapped version of it all in-house without the additional fees. All those things mean that if you're an institutional buyer, you can invest again, if you wanted to, in the future of Linea's fees and volume and its growth. You can invest in its future by getting into these assets without the need to have secondary markets, high slippage, no fungibility. You can have something that you can get in and out of very rapidly. So that's how we see the things coming together. And, hopefully the people's deep DeFi people and degens are starting to think about how you might deposit it into lending protocols, et cetera, et cetera. We can talk about that another day, but there's so many different things that can happen now, not only with the tokenomics, but with how Linea supercharges itself, basically, through this partnership with Etherex.
By the way, I was definitely missing some of the dots to connect here. So I have used Velodrome and Aerodrome since they launched, and to your point, like I've seen what happens when you have folks locked up in the way they have them locked up. You're either you're chasing incentives. It's an incentive system to get you to vote on certain liquidity pools. But I've also seen, this intent with larger holders to want to subsidize and reward pools that are really important to growing liquidity on the platform. Like the major pairs, like something like a liquid staked ETH and some other form of ETH, or like ETH and some stable coin. So when you talk about this partnership, I guess, is there like an investment then from Linea into Etherex, or like ultimately am I to assume that when Etherex is voting week to week on pools, is there just like a larger ownership there on the Linea side? So Linea can really have like, a voice in designating which types of pools are being incentivized on Etherex.
Yeah, that's exactly correct. And like one of the reasons we wanted to have this partnership is that, again, it really is important to make sure that we have a liquidity engine where we can start to direct incentives towards the pairs, the protocols, everything that we want to have to really bootstrap according to Linea. So you can see now, like in the bigger picture, you have all of this yield that has been generating on the sort of native bridge from the staking. You of course have the fees generated from the trading volumes that will benefit through increased liquidity. But then we'll also have the ability with Etherex and native DEX to actually then sort of directly incentivize some of those assets and pairs as well. And that's very interesting as well for asset issuers, because now there's a real easy way for them to get bootstrapped on Linea. So again, it's a sort of pitch, if you want to, an institution, whether it's a new stable coin or whether it's just like a new, tokenized stock or anything, like you can now come and there's a path to being successful on Linea and sort of having that be the gateway for you to come into Ethereum. Because again, Linea very much is going to be a part of Ethereum and everything we discussed. So yeah, you can start to see the bigger picture. And of course, the great thing there is that as this flywheel starts to churn, more liquidity, more burning of ETH, more burning of Linea, like it all starts to come back and, really should create a very sustainable, like almost sort of digital sovereign state where like the economy grows with taxes. That's kind of how we see the future.
It all makes sense. In case listeners aren't aware, Coinbase Ventures, I think at some point took a large position in Arrow tokens. And so like that has already played out there. And so this makes total sense that...
It's the famous play, right? So I think what's interesting there, if you want to compare it directly to the Aerodrome example, the benefit there is you can see how that sort of played into the success of that protocol and how that's supercharged what's happening on base more broadly. In this instance, it's by design from the start, which wasn't the case there. That was how they made decisions along the way. This is by design, so which means it removes, not surprisingly, a lot of the friction, but it also means that a couple of key things. Linea is going to be able to basically direct emissions, 25% of emissions, towards the most productive pools with a valuable emission. And then the lockup positions for anybody who wants to be involved. As you said yourself, you've been a VVLO and a VAero holder over time. If you wanted to dispose of your VNFT, you have to jump on a secondary marketplace to do that. And you might try to, maybe there's 40 acres or some other DeFi protocols you can use to try to borrow against those positions. But your only other option is to find some kind of wrapper right by a third party. The benefit here is you've got XREX, which is not a 4-year lock. It's an instant exit whenever you want to with a penalty. And then the wrapper is built in-house. Again, those are actually pretty big things, I guess, to look into. But it just means that friction, that thing that made it hard, the part that made it a little bit more difficult if you were the token holder, that friction is removed now. So you've now got a far better alignment, like I said before, that DEX trilemma between your LP provider, your trader, and your token holder. They've got the same benefits and the same ability to enter and exit the ecosystem as they desire based on their own circumstances.
That's a huge improvement. That speaks to something that like I've always enjoyed on the side of Aerodrome and Velodrome, but also recognize like this is what keeps me locked up continually for 4 years. Like I want to keep collecting fees and being able to vote on pools and there's no exit plan there. And I have personally always wanted there to be like some other option there, like what you're describing, but that's really cool. I had no idea. Awesome stuff. I'm learning in real time. Guys, before we wrap up, just Declan, can you share anything else that we should look forward to in the next like 6 to 12 months? Like anything else that you can share given that the TGE is what's been most top of mind for all of us. But like, yeah, anything else in the roadmap that you'd like to highlight?
Yeah, so lots of exciting stuff on the tech side, first and foremost. We're marching towards, being sort of completely sort of censorship resistant, stage 2 roll up. And I mentioned native roll up as well, which I kind of think of as like a stage 3. Like it's not like an official stage, but it's probably like as secure as you can get. Making sure that everything is, fast and cheap. So, sub-second block times, sub-cent transaction fees, really how blockchain should be to kind of bring the world on chain. I think other than that, we have lots more on the ecosystem side. I think we spoke at the beginning where it's great to have amazing tech. I think we've built an amazing technology, and now more people are sort of coming in and building on top of this completely open source protocol that we've just helped to get off the ground. But really it's more about the distribution now, and sort of how can we actually bring TradFi on chain? How can we help to make builders build better protocols and products on the blockchain? And so a lot of our time is going to be spent more on this. And I would say the other sort of interesting thing as well is, again, sort of part of the wider ConsenSys family is actually, most people sort of enter, or from a user's perspective, most people use the blockchain through a wallet. And obviously, it's great to have, the MetaMask team sort of, virtually, let's say next door, and starting to see some of those sort of synergies where there's a real seamless, almost like Apple-like, vertical integration of the interface and the operating system. So you as a user can start to benefit from, using Linea and trading on Etherex and having this all be wrapped up in a nice, easy user experience of a wallet. So really sort of thinking about what is it going to take to bring capital on chain, which is almost like the building block of the market. And then from a user's perspective, how can people start to actually interact with that market in the most seamless way possible? So that's really just the focus for the next sort of 6 to 12 months.
Guys, I think this is a great place for us to wrap up. Just such an enjoyable conversation. Really grateful to get all this detail because, again, I just returned to Linea, thinking, gosh, I need to start using more of these applications. Just having worked at ConsenSys years ago, I've always known that there are good builders behind the scenes, but the incentives finally make sense to me. And for what it's worth, I really was learning everything in real time here today about Etherex, and very excited as a longtime v33 advocate. So cool to see the improvements that you guys are making there as well. But I want to remind our listeners they should learn more about Linea by going to linea.build. They should follow Linea Build on X, follow Declan Fox 14 on X, and then for Etherex, go to etherex.finance, follow EtherexFi on X, and follow Trantor 2140. And we'll put all of that into the show notes so you can easily reference those links. Guys, thanks again. Just awesome news to see all of the development happening within Linea. I want to give you both any final word, and we'd love to have you back in the future.
Yeah, I can go first. Firstly, thanks for hosting us. It's amazing to chat with you, and I hope people learn a little bit more about the Linea ecosystem, kind of how we're really approaching the difference of Ethereum and ETH, and obviously Etherex as well. I think just what I recommend is if you're, just come check it out. Come bridge to Linea. Start using some of the applications. Again, reach out to me and provide feedback. We're always open to seeing how we can improve things and make things better for people coming on chain.
Yeah, and once again, thanks very much for having us. It depends, of course, when you go live. TGE is sort of in the next 36 hours from the time of recording. So there's plenty happening for us in the next sort of week and a half to 2 weeks. Again, come check us out at Etherex Finance. And one of the reasons to check us out, to be honest with you, is to understand, all the bullish developments as they continue to grow, not only at Linea, but at Etherex itself. So we'll have TGE very soon. And then from there, of course, lockers will get involved, first epochs, voting, all the good stuff for those who are familiar with, the voting sort of mechanisms and emission tokens. And then, of course, rebases and all the good stuff that happens at the start of plenty of these wonderful new protocols. So again, very excited for the next little while with Linea. And thanks again for having us. And good to see you coming back into the Linea ecosystem. It'd be good to obviously have a chat with you guys anytime. In particular, come join us on the Discord. Say hi.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.